Have you heard of the Martingale strategy? It's a popular betting technique that involves increasing the amount of the initial bet after a loss in order to eventually recoup all previous losses and make a profit. In this video, we'll be exploring the ins and outs of the Martingale strategy and discussing where it can be applied. So, what exactly is the Martingale strategy? Essentially, it's a money management technique that involves increasing the size of your bet after a loss in order to eventually recoup all previous losses plus a profit equal to the original bet. For example, let's say you start with a bet of $10. If you lose, you would then increase your bet to $20 in the next round. If you lose again, you would increase your bet to $40, and so on. The idea is that eventually you will win and be able to cover all previous losses plus make a profit. Now, the Martingale strategy can be applied to a variety of betting systems, including binary options trading. In binary options trading, the Martingale strategy can be used to trade a variety of assets, such as currencies, stocks, and commodities. However, it's important to note that the Martingale strategy carries a higher level of risk and can result in significant losses, especially if the trader experiences a prolonged losing streak. The strategy relies on the assumption that there is a finite amount of money and that the trader will eventually win, but this is not always the case. It's also important to consider the potential for unlimited losses if the trader continues to increase the bet after each loss. There are a few potential drawbacks to the Martingale strategy that you should be aware of. First, the strategy relies on the assumption that the trader will eventually win, but this is not always the case. If the trader experiences a prolonged losing streak, the losses can quickly add up and exceed the trader's budget. Additionally, the strategy requires the trader to have a large enough bankroll to be able to increase the bet after each loss, which may not be possible for all traders. Finally, the strategy can be emotionally draining, as the trader may feel pressure to win and recoup losses. So, is the Martingale strategy right for you? It's important to carefully consider the potential risks and rewards before deciding whether to use the Martingale strategy in your trading. If you do decide to use it, make sure to set clear limits for yourself and stick to them. It's also a good idea to have a solid understanding of the market and the assets you're trading, as this can help you make informed decisions and increase your chances of success. Remember, there is no surefire way to guarantee success in binary options trading or any other type of trading, and it's important to manage your risk responsibly.